Hello everyone and welcome to my more important analysis videos with me, Rich Paramarket Analyst at Hantec Markets. Monday the 17th of September. We've got a fairly cautious, I would say, start to trading this week. A little bit of a slip back on equity markets. They've had a news out over the weekend that Donald Trump is apparently ready to pull the trigger on this renewed set of tariffs. 10% tariffs is going to be on $200 billion worth of imports from China. And that's sort of hit market sentiment to a degree. Equity markets are weaker, about a quarter to almost 0.5% across Europe. And there's, interestingly, has been a bit of a dollar correction as well. So let me show you the board where we see equity markets, as you can see here, across Europe down in unison. And the dollar is actually weaker across the Forex majors. Now, normally when we see the trade tariff dispute sort of flaring back up again, we normally see the dollar performing fairly well, but not apparently today. We've seen a bit of sort of a mixed move on treasuries, 3% on the 10-year. Hit that on Friday, just held off a bit. It's actually back higher again, but sort of mixed on the 2-year as well. So I don't think is helping the dollar, and it's interesting that, as I said, with caution a little bit elevated, we've got the VIX back up, and that's again playing into that equity markets move lower. And that weaker dollar that we've got is helping to support the gold price back, not a million miles back off 1200 again. The oil price also, interestingly, is just mildly finding a bit of support as well. So there are some, as I said, mixed markets really, where we are sort of not really gaining too much direction off this tariffs news, and it'll be interesting to see if it does actually come through today, because I mean. It's been in the offing throughout the past week or so, and as yet it hasn't been actually put into place. So in terms of data points today, we're looking just pretty much at the Empire State Manufacturing data at 1:30. Expected to be 23.0. The Eurozone inflation data came out as expected. No surprises there. 2% on the headline, 1% on the core. That is the final reading of August. And we're looking forward now towards the New York Fed manufacturing data. Now, my chart today is the Euro Aussie. Now, what we have seen in Euro Aussie is this sort of element to a roll. Sort of the bulls have lost traction. You can see that on the hourly chart. I'll show you here on the daily chart where this uptrend has been broken. You got a negative candle on Tuesday last week. That got negated to an extent, but never really gained too much traction in that recovery. And it's sort of, again, aspect of rolling over here. And you can see that on the momentum indicators. MACD line's close to a cross, stochastics close to a confirmed cross, and the RSI sort of around 70 area. So this is sort of a crossroads really, and I think the crossroads is going to be 61.40, which was at old breakout level from April, and again, so a degree of resistance before breaking to the upside, then became supportive, and it became supportive again last week. So the fact that if we see this market rolling over again, you've got to watch out for that support, 61.40, and that would likely also come with negative crosses on the MACD lines, stochastics, and probably RSI below 60 as well. So that would be the level to watch out for, I think, because if that gets broken, I think we are then moving corrective on Euro Aussie. Until then, we're fairly sort of neutral, I think, having broken that uptrend. 63.55 is resistance, and I think there is the hint of a possible sort of corrective move, but it hasn't yet come through, and these are the things we need to look out for in the coming days and days ahead. So with that in mind, I wish you good luck in your trading, and I will speak to you later.